Good morning, it's Harvey Jackson. Just going to get through some of the news here. Iran, Trump signed a deal. It's still shaky at best. And then USMCA and Trump trade tactics is shaky at best there as well. You'll hear some of this rhetoric that's going on. U.S. and Iran president signed ceasefire during his sitting at the G20. Or G7, sorry, and both they did it electronically, and I think Trump wanted to win while he was sitting with the G7 leaders. Oil prices continue to slide. You can hear here in his talking on the tarmac coming back to U.S.
Terminated.
You'd rather terminate. Those are different things, sir. I just want to be clear.
I would rather not have the agreement, but I may sign it.
Right.
But we do better as a country if we don't have an agreement.
So are you thinking of?
Yeah, I'm thinking about maybe we won't be able to make a deal. I would rather not have the USMCA. The primary reason I wanted it was because there was no way out of NAFTA, which was the worst trade agreement ever made, like ever. And they had no termination. And it was very hard to get USMCA for that reason. And I had a 6-year close. Who would have thought I would have been here in the 6 years? They got it 6 years because they hoped I wouldn't be here. My term was supposed to be over with. So on top of everything else, it comes to, I would prefer not having an agreement, but I'm open to doing it. We'll see what happens.
So as of now, it's just going to stick around for 10 years. You're okay
We're not, no, it's not sticking around. It'll be terminated. In other words,
after a decade.
It expires.
Yeah, in a decade.
It expires.
Yeah.
I prefer that.
In the first paragraph.
Indonesia on track to launch a B50 biodiesel program. So you can see a little bit more bio or energy security as you get that less and less of the palm oil on the market. Just another shot from X here. You can see that the gasoline actually has a seasonality. Diesel fuel, not quite as much if you're looking for a seasonal timeline. It does move up in the fall if you're using the diesel fuel futures, the heating oil, and that is because of heating going into the winter. I talked about this the other day. Farm bankruptcies in Brazil is skyrocketing. Poor farm economy there as well. Talking about economy, we just want to highlight the differences in debt to GDP. U.S. is sitting at 72.2% debt to GDP. Canada is sitting at 118.3, and then if you take all the G20 add them all together, they're still 91.4. So the people that are listening to Carney and how good that Canada's doing, I guess they're not feeling it. I guess. Quick look at the weather. You can see the all hazards map has got lots of active weather across there. Next 7 days, all the maps are showing some moisture showing up in Alberta, Saskatchewan, and your corn belt is starting to get pretty wet. I'm going to say too wet maybe in a lot of cases here. This is your 8 to 14 day forecast, and you can see I had some anomalies just yesterday where I think one of them was showing not very much moisture in the prairies or Manitoba, and now they're showing throughout all of the prairies, and it still looks like 2 out of 3 are in agreement of moisture showing up in basically the whole corn belt, soybean belt. There's still an anomaly of dry in a couple of regions in Western Canada. You know, you get basically Saskatoon going down to Moose Jaw, but if some of these other weather systems come true, some of that's going to change as well. But you can also see the extreme wet in the north. Basically, I call it the Yellowhead Corridor. Eastern Alberta border has basically got moisture right across, and then there's a couple areas in north of Winnipeg and Winnipeg area and the northeast or northwest. Sorry. Quick look at the market. Canola is, as I took the screenshot, down 4.5. Soybean oil is down a full penny, trading at 70 cents. Crude oil is down another $1.22 at 75.57. Soybeans are down 8. Spring wheat is up 5 cents at 6.30. Hard red winter is up a couple cents, and your Chicago is basically flattening out. Corn is down 2.25 cents, and the Canadian dollar is down again. So here we are. We're just going to look at the canola in US dollars. So this is in USD, and we broke through 3 days ago. When you're looking at this as an indicator, that's how it gets bought. Canadian dollars just going for a ride downward, and it insulated us for at least 2 days of trading and not breaking through the 61.8 area. So if it breaks through the 61.8, you're probably looking at a catch around, let's call it 715 area, and then the next area would be right at the 700. And if we're just looking at the soybean oil, as we broke through, and the next area would be in this here below 68 to 66 cents. And if it's going to get full retracement, it would be all the way down in this 62 cent area. Just the price difference between percent move of when it got hot, the highest on canola versus even soybean oil, pretty well correlated. Still didn't rise as much because it's only a percentage of oil in the canola, 45%, whatever. So you don't get the same rise, you don't get the same drop. Soybean futures had a recovery for a couple of days, and now it's failing again. This is here in November. Crude palm oil is still stuck in this range, and I would expect it could trade to the top end of this range once we get some reports of some tightening of that palm oil complex. It is the largest veg oil that's consumed on the planet. So crude oil, I do expect this gap to potentially get filled. I would expect it will probably bounce from there because the problems are not over yet, and there's still 60 days of negotiations. And trust me, there's going to be some things that are going to be said there that's going to make the market move up there for sure. Here's your diesel fuel futures. Little ways to go to get to filling the gap. It definitely can get there. Gasoline, I don't know if it's going to get there in this or in the driving season here. That's a long ways to go. Canadian dollar, just about at the full retracement values, back to there at just 70.8 cents. We're just about there. U.S. dollars back at the $100 index. Quick look at wheat. Couple of recovery days. Now we're above the short-term moving average. Now we're approaching the 20-day, and we'll see if we can get above that. Kansas, the same thing. Really nice, strong recovery yesterday, and you can see the Chicago. It had a pretty good recovery. Now a bit of a pull off. Now it's right back onto the 20-day moving average. Look at milling wheat. We're just getting back into this range. We went below it, so we made a lower low. Same thing here with corn. We made a lower low, but we're getting back above this area right here that had made a low back at the beginning of the